This is JView's platform here again. We are still at the early stage of this Forex education class. In today's episode, we shall be talking about fundamental analysis in Forex trading. Fundamental analysis in Forex trading involves evaluating economic, political, and social factors that influence currency values. Traders assess indicators like GDP growth, interest rates, inflation, employment data, geopolitical events, and central bank policies to forecast currency movements. It helps traders understand the underlying forces driving market trends and make informed trading decisions based on economic fundamentals. We shall be discussing fundamental analysis in Forex trading under three major Forex market parameters, namely 1. Economic indicators and Forex, 2. Interest rates and Forex, 3. Political events and Forex. Number 1. Economic indicators and Forex. Economic indicators play a crucial role in the Forex foreign exchange market, providing traders and investors with valuable insights into the economic health of a country or region. These indicators help forecast potential movements in currency exchange rates, assisting market participants in making informed trading decisions. Here's an overview of how economic indicators affect the Forex market. Number 1. Gross domestic product, GDP. GDP is a fundamental economic indicator that measures the overall economic performance of a country. It includes all goods and services produced within a specific time frame. It is used as a comprehensive scorecard of a given country's economic health. GDP is calculated by adding up the total value of goods and services produced, everyone's income, or what everyone in the country has spent. The Office for National Statistics, ONS, for example, collects data from thousands of UK companies to measure GDP each quarter. GDP is an important economic indicator that helps to gauge how well economies are doing. It is also used to compare the size of different economies at a different point in time. Forex traders closely monitor GDP figures as they indicate the economic growth and stability of a nation. A growing GDP often strengthens the country's currency. Number 2, employment data. Key employment indicators such as non-farm payrolls and unemployment rates are significant factors affecting Forex markets. Low unemployment rates and strong job growth suggest a robust economy, potentially leading to a stronger currency. Employment data is a critical economic indicator that significantly impacts the Forex market. It provides insights into a country's labor market health and can influence currency exchange rates. Key employment data includes non-farm payrolls, unemployment rates, job creation, workforce participation, and wage growth. Here's how employment data affects the Forex market. Number 1. Non-farm payrolls, NFP. NFP is one of the most closely watched economic indicators in Forex trading. It represents the total number of paid workers in the US, excluding farm employees, private household employees, and non-profit organization employees. Traders use this data to gauge the health of the US economy. Higher than expected NFP figures typically strengthen the US dollar, signaling economic growth and potentially leading to increased interest rates. Number 2. Unemployment rates. The unemployment rate reflects the percentage of the labor force that is unemployed and actively seeking employment. A lower unemployment rate is seen as a positive sign for the economy, suggesting that more people are employed, which can lead to increased consumer spending and economic growth. Forex traders watch for changes in unemployment rates, as lower rates can contribute to a stronger currency. In conclusion, understanding and analyzing these economic indicators is essential for successful Forex trading. Traders utilize this information to develop strategies, manage risk, and predict future currency movements in the Forex market. We shall continue from here in our next class to discuss some other fundamental analysis indicators. If you have not subscribed to this channel, kindly do so now and click the bell icon to get informed when the next video is out. Till I meet with you next time, please stay safe. Bye for now.